Hi, it's YouTube Analysis here, and today is quite an important day for Premier Oil and Premier Oil holders, of course, investors, traders, whatever. Today we've seen a break above a major resistance area. That resistance area was in fact warrant conversion, issuance price. And that was 74 pence. But of course, it's too complicated to explain, and many of you by now will know how the warrants works, the convertible warrants work. And of course, there's many people on the board spouting a lot of nonsense, so you've got to read it yourself. In fact, the prospectus of the refinancing is the best place to look. But today, we're just seeing a repeat of what I've been mentioning in previous videos, and of course the first video that I'd released on Premier Oil, which the share price I believe was 43.75. Smart move by the CEO to purchase more shares, realizing how ridiculous the valuation of the company has become at that point. Now we're way past that. First of all, oil prices have recovered all the way from $46 to $48, all the way to approximately $60 for crude now, but crude's not even important. We're dealing in Brent and a rich Brent. So what about $66, something like that today? $65, give or take a few dollars here and there, but at the end of the day, it's pure money. The production of the company is high, and of course, with natural decline, you'd expect the company's production to be below 80,000 without any asset sales, or sorry, with the asset sales as well. But the thing is, Premier Oil has also been addressing certain fields. Solon, unfortunately not. Solon was more of a, should we say, slip up? Every oil company has a slip up. Unfortunately, they were not working with a partner that was too experienced in the area where they were drilling for hydrocarbons. Unfortunately, they didn't get the optimum 20 to 25k that they were looking for. It's about 9k now or something like that, and you could spend a bit of money to push it up a few thousand barrels, maybe 2-3,000 barrels. But is that useful? Likely not, because Premier Oil wants to cut capex, which they've been doing, and in fact they've delivered Catcher's first oil on time, in fact slightly ahead of schedule, and they are definitely doing it with a partner that has experience in the area of which Catcher is in. So Tony, I've never lost faith in Tony, as I've always been saying in my previous videos. If you'd like to go back, Tony Durrant is a great CEO. In fact, one of the greatest CEOs I've seen from a minor, should we say a medium sized oil company, because Premier Oil is way below $1 billion, that's for sure. And of course, billion isn't even fair value. I believe the company's net assets, once debt reduction goes below, say, 2 billion, but that needs asset sales to come into account, and of course the profit that will be coming in after oil price starts stabilizing, and of course it has been stabilizing above $63 to $64, and now that it's going even higher, we can see greater forecasts for the company's second half of 2016 results, and also what is to come with the first half of 2018 in the new year. But of course that's further down the line. Now what we expect to see from Catcher is actual numbers, and the initial stabilized production is shown here at about 10,000 barrels per day. In comparison to Enquest did not even release a number. In fact, on Enquest's accounts, it said they were producing 37 barrels a day, and they said they were doing what, 25,000, something like that, and that was their aim. Of course, Enquest didn't work with a major like Premier Oil has, and this is a major thing that has came to light back in the message boards when I was on LSE, before I'd been banned for calling out Leon Hogan and his pump and dumper crew. I'd been saying that catcher is different to Solan, and many people have been saying it but haven't been given the voice. And as we can see in today's share price reaction, unfortunately it wasn't what we would have initially expected. I mean, when Kraken was mentioned for Enquist rose about 8%, and their debt is a huge pile that is only increasing. Premier Oil have decreased their debt, not hugely, but with the asset sales that are to come to play, and there are some also rumoured asset sales. When those come into play, they will go on the accounts, and of course, after Witch Farm's asset disposal, none of the numbers in terms of positive discount from the debt. And I think it's interesting how they've kept the cash. But with Tony as the CEO, definitely he can be moving things forward. Now, once that Witch Farm asset disposal is taken off the balance sheet, of course it takes away about 5k barrels per day in production, but that's 200 odd million taken off debt, and that's one step closer to net debt being below 2 billion, and that's crazy, especially as a Premier Oil long-term shareholder. Well, I can't really call myself a long-term shareholder because I've been involved from the low 40s, my first initial entry, and I have been trading, but my first initial entry was 43.75 and 43.66 and 43.75. There were two lots. And of course I've been trading swings, but I've also been buying all the way up till the recent break of 70, which was a major chart turnaround. And in fact, that was kind of a precursor to us to believe we'd see what happened in January 2016, where the share price went from 74 pence odd to 96 pence, but then it crashed down. I would not like to see that, and thankfully we're not seeing that, but we're seeing gradual rises, because in fact, despite the massive short position, and I mean, anybody must know by now, the shorters are stuck. They have to be stuck. It could be a great refinancing plan, goodness knows, but the shorters, if they were to exit, what happens is you have a massive short squeeze. And remember, they cannot all exit at the same time. It's very difficult to evacuate all the short disclosed positions now, and even the undisclosed positions below 0.5%. But if they gradually start to close, which they have been doing, and pay no attention to the short disclosure on shorttracker.com, it says about 12% and some increasing number. The shorts are not increasing. These recent RNSs are just proof of shorts closing, because now these major companies such as Deutsche Bank, Bank of America, Merrill Lynch, they're buying back shares. Why are they increasing their shareholding if they're supposedly short? It's because they're buying back the shares that they loaned out on short to other banks and other institutional investors. Of course, people were banking, and I'm talking about institutional investors, they were banking on Catcher failing and turning out just like Solan, and of course they'd all be shorts on a share price crash. This is a major event, in fact, for shareholders in Premier Oil, and if I wasn't fully exposed, I would have increased my size. But what I am saying is there's a good news flow to come as well. These asset disposals decrease the net debt, thus increasing the net asset value for Premier Oil. And what does that do in turn? It increases the share price. Unfortunately, I have seen a lot of doubting on the message boards of certain individuals. In fact, there's one lad called Chang, Yi Chang, something like that. He is, I think, in an argument with somebody called Sauerkraut. Now, Yi Chang has stated certain things such as Zama, as I remember, although I don't actively go on the message board, I do read from time to time. I remember Chang mentioning Zama, and he was right about that. There was a 30% price rise. And Sauerkraut seems to just be a salty old gentleman. Apologies, Sauer, if you're listening to this, but I think you need to open your eyes and actually realise what's happening. Look at the accounts, do the numbers. A production of, say, 80,000, just as a round figure. gives you huge amounts of profit at a $65 price of Brent oil. But this is for you to decide yourself, shareholders or not shareholders. I hope my information helps.